Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Trent versus Dmart, a comparison between two top-notch retail companies as to which one is better and where you can invest. So let's get started. First, our disclaimer that this is not a stock recommendation, and people taking any position to any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Before I talk about the comparison, here's some small request that kindly support me on Patreon, and once you do that, it will help me grow the channel. It will help you also ask me questions on a daily basis on Patreon. And once you get the $10 membership, you will have access to my portfolio, my watch list, and a number of podcasts that I put up from time to time. And if you can pay $100 upfront, you save 20% as you get 1 year access by paying for 10 months. For detailed market or company talk, you can contact me directly on email and we can work things out with a fee. And also, if you cannot pay through credit card, you can probably do it through PayPal as well. Now about the industry, the retail industry as a business has surged from 2000 onwards, from 2000 2001 onwards. It has surged. First, we had the Future Group doing extremely well, Future Lifestyle, etc. Those companies were doing very well, the Future Group stocks, but they had a lot of debt, and so Big Bazaar and Pantaloons at that point of time failed. They came back into prominence post 2009-10, but again it has not been doing that well, and we have seen how the Future Group stocks have performed. But they were the precursors to the retail chain theme, etc. But what has happened after post that is that it is not always that the first mover does extremely well. So basically, the retail industry is proving to be a lucrative sector for those who invest wisely into it. So what has happened is that Dmart has come out with its own model and has been doing well with their own stores and not rented stores. They have some rented space, but very less compared to the own stores that they have, and that helped the company go through the pandemic very well. So any kind of situation, if you have your own house, you can just shut that down and you can move to other places where the pandemic is not there, just to give you an example. So they don't have to pay for the rents, etc., during that period. And once things opened up, they opened it up for a number of hours and started selling products. So they did extremely well. So DMart came out to be one of the winners in this retail, you can say, fight from 2000 to 2020 21, and they started their business in 2008. Trent also followed suit and has done extremely well over the last few years in terms of profitability, in terms of sales growth, and the valuations look much better in Trend. But to just come back to the industry, so pandemic has halted the progress of many of the companies in this industry. The smaller players have either went away or got you can say acquired, and so Easy Day, etc., got acquired by the Future Group, and DMart also went into acquisitions into other brands and products. Costs have increased dramatically for these businesses because most of the people are not going to these retail stores and buying products. What they are doing basically is they are buying online. So online retail stores are also doing well. So those large retail players who are online are also doing extremely well. In fact, in the furniture space, that is happening, home improvement space, that is happening a lot, that products sold online in that space, and those companies are doing much better. It is set to grow at greater pace once things completely open up, and this is pretty obvious. And second and third tier cities to see greater growth. So basically, it's not the Bombays or the Delhis of the world who are going to really do extremely well over the next decade. I think it would be the third tier and the fourth tier cities across India, where the incomes are increasing, people who are doing more businesses are doing better, and as businesses flourish with the opening up of the economy, I think these cities will continue to do well, and that is where the growth is going to come through. If you look at the comparison between the two companies, Dmart and Trent, the market cap of the company of Dmart is around 2.3 lakh crore, Trent is around 33,000 crore. So much you can say smaller companies in terms of market cap is Trent. Operating profit margin is much better at 7% for Dmart versus 4% for Trent, and this 3% might not seem a lot, but in terms of retail and in terms of you can say consumer businesses, 3% is a lot. That's 300 basis points. That is a lot of a difference, and that is probably why Dmart is, that is one of the reasons why Dmart is trading at such high valuations. I look at the ROE, 25% for Dmart versus 6% for Trent, or negative 6% for Trent at the moment, and the market cap to sales ratio at this point of time is 5 for Trent versus 9 for Dmart. So 9 times sales it is trading at, whereas 5 times sales is what Trent is. So in that sense, Trent is cheaper. But if you look at the return on equity, and this is one of the you can say most important measures that most of the investors look at while investing into a company, 25% is absolutely tremendous even now in this kind of a situation to produce such ROEs. Earlier it was northwards of 35%. Today it is 25%. So that is the reason why DMart is trading at 100 times earnings, and Trent is not there. Institution holding 10% FII and 6.5% DII, but you need to understand promoter hold around 75%. So then that takes away 92% of the complete holding from the market. Only 8% free float is there for DMart. Here in Trent, it is 30% FII and 10% nearly 11% DII holding. So that tells you that okay, there is a high FII holding, but promoter holding is more in case of DMart. If we continue with this, so if I say so, promoter holding here is 37%. So overall, there's greater number of shares that are as free float in Trend compared to DMart. So when DMart comes up with half decent numbers, the stock really does well, and when it falls also greater. But what is happening is DMart is coming out with fabulous numbers for the past 3 4 years I have seen. So I would say that the trend may continue, and larger players are not willing to sell the stock, whereas in Trend the movement is more volatile. If you look at return on capital employed, there also DMart trumps Trend with 13%, and there's a huge gap of 1000 basis point here. The stock is up 70% over the last 12 months, whereas the movement in Trent is 66%. It is not that DMart has really taken a float and gone up 3 4x. It is up 70% versus DMart, Trent's 66%. So here the valuation doesn't look that expensive, and as I have mentioned, promoter holding is much greater in DMart. The P here, we cannot say a P in Trend because the numbers are up and down. There are losses, there are profits in one quarter and the other. But DMart is trading at 160 times, so which looks expensive. But when you consider, when I've given all the matrices here, it feels like that DMart might continue to perform much better. So, just to tell you in a nutshell, I believe that Trent has valuations on its sides, but DMart is producing numbers quarter on quarter, year on year. They are performing much better than what is expected of a retail chain in this kind of an environment. So, in that sense, I still believe if somebody is invested into DMart at lower levels, should continue to keep invested and stay afloat. So, as I mentioned, in a nutshell, I believe that if somebody is holding DMart from lower levels, they should just continue to hold, and they should just probably add on major declines. But for Trent shareholders, The thing is, the comforting fact is that comparatively the valuations look better. So both have yeah, very strong you can say promoters, with Tata in Trent and Dmart with Radha Krishnan Damani. So there's no issue with Trent having 37% promoter holding. That's not a huge issue. But business of Dmart is much stronger. It looks like that Dmart's business will continue to be strong. The way they are concentrated into some of the regions, or one region, and performing much better. So growth in top and bottom line much better in Dmart compared to Trent, but Trent has scope to improve. Once things open up, the numbers would become much better in Trent, so the movement in the stock would be much sharper on the upside in case of Trent. So business front both may do well once economy opens up completely. So it's not that Dmart may not do well, Dmart will also do well, but as valuations is much better in Trend, so the movement in the stock on the upside would be greater in case of Trend. That's what I feel. So my call, both are top class firms. If you're holding any of them, keep on holding it. Trend more attractive, so you can add on to Trend at these levels. I won't say the same thing with Dmart at 36, 3700, unless you have a 6, 7, 8 year time frame. If you have that, then of course you can add even something like a Dmart. If you have Dmart from lower levels, as I mentioned, keep on holding, keep accumulating on bad days, and only take small position at these levels in any of the stock. With the kind of business environment we are in, I think next 1.5 months could be difficult. So wait for sharper declines to buy into, the way we have seen in the last week. Maybe another one or two sort of such declines would come in, and that is where you need to probably buy into the stock. So this is a video of comparison between Trent and Dmart. Please like and subscribe my channel, hit the bell icon so you can get my videos straight away when I post it, and kindly share my videos and support me on Patreon. Thanks a lot for watching.